Now that we have our strategy drafted, we need to come up with a parameter range over which to test this. And for this dummy simulation, what we've done to show you how to go about robustly testing a parameter space, and not only doing so for testing it robustly, but also to make sure that you aren't necessarily overfitting to any one particular parameter space and biasing the outcome of a strategy that could otherwise have performed completely differently. In order for us to do so, we've selected a range of between 10 and 50 Darwins in steps of 5, setting transaction costs to 0.2% round trip. We've then written a plot strategy results function that serves two purposes. It returns raw results and also plots them using the plotly data frame scatter function that has already been provided to you on GitHub in DWX graphics helpers. We loop through our range of Darwins. And for each test, we store the results in a dictionary object that is keyed by the test we're conducting. We then transform these into keys and values for us to be able to construct a data frame to plot. And once that's achieved, we go ahead and start conducting tests on each of the periods and number of Darwins that we are interested in. This function is available to you in this notebook. Though I'm looking at an HTML version of the notebook right now, you have both the HTML version as well as the Jupyter notebook itself available to you on GitHub in the Darwin API tutorials repository. The first test conducted with daily sampling with a transaction cost of 0.2% in steps of 5 top-end Darwins. And as you can see from the results, it is very quick to fail and be discarded from our list of things to consider in terms of this dummy trading strategy. We go from 10, 15, all the way through to 50. The results are very quick to fall to minus 100% equity, leading us to conclude that the momentum factor on a daily basis is most definitely not predictive of future daily returns in this data set. The next test we conduct is, since daily failed, and we may possibly be looking at way too noisy a factor set for that sort of simulation, let's resample the data to weekly and retest to see if there's any improvement. If daily is too sensitive, and weekly may yield possibly better results. We go ahead and do the same thing with the plot strategy results function that we've written so that you can achieve this sort of testing very easily. And this is all to give you an example of how to go about constructing code for yourself to enable you to test fast and do it in a way that makes it flexible for you to test various scenarios as we are right now. In our weekly test, again, we pass the same range of 10 to 50 Darwins in steps of 5 with a transaction cost of 0.2%. And we calculate with a weekly resample. The results now are slightly better, but this strategy is nowhere near investable because we're still on aggregate losing. And obviously that doesn't yield itself to any future testing to possibly see if there's any alpha in this data set at this point in time. But as an exercise, it has allowed us to conclude that even though the weekly momentum factor is losing, it definitely demonstrates more strength than the daily momentum factor that was losing straight away and not yielding any alpha at all. Finally, we conduct one more test with the same parameter range of 10 to 50 Darwins in steps of 5 with a transaction cost of 0.2% on a monthly resample data. And this time we get a slightly different result. This time we have what appears to be possibly an alpha source. And we may have ourselves an alpha factor in the form of a monthly momentum factor. But can you spot something that is not right in this factor, in this result set? And what's not right in this result set? Before I continue anything about that, I encourage you to, if you have an idea as regards what you're looking at, please do share it in the comment section of this video right now so we can see it and so other people can contribute as well. And what's immediately visible is that there are some things that make sense. For instance, as we increase the number of Darwins, the blue line being the number of Darwins being 10, and as we increase the number of Darwins, it makes sense that the cumulative return over time decreases as we introduce more and more assets into the picture. And also, there is a hidden benefit here of diversification that we're introducing into the picture as well. Obviously, we haven't looked at anything to do with correlation in this analysis, correlation between assets, but it suffices to say that a portfolio with 50 Darwins is unlikely heavily correlated, is unlikely full of assets heavily correlated to each other, as opposed to one that has fewer assets. So in that respect, the results make sense. But what is interesting to see is that as of the February to March period, suddenly all our series go into a complete shift in trend. And this is something that yields a strategy where we're going to be suspicious of the outcome, because if everything has been great up until this point in time, but suddenly we've had a complete breakage of this momentum factor that demonstrated excellent behavior, then we have two things to consider. We may possibly, without overfitting anything, have hypothesized a factor that is inherently overfit. The likelihood of that is 50-50. The other thing that, from a quant's perspective, that you need to look at is, well, if this factor did exist and was indeed an alpha factor up until this point in time, what happened in the February to March period that resulted in this factor declining in performance over time? And that's something that we're going to address with our volatility data that I talked to you about earlier, that we preloaded for you and have provided to you on GitHub for you to use as well. As always, if you enjoyed this presentation, please do consider sharing it with your social networks, colleagues, co-workers, and friends. And do subscribe to the Darwinex YouTube channel so you remain up to date with all future videos that will be released in this series and other topics discussed on Darwinex. Thank you very much for your attention. See you next time.